Good morning, this Monday, the 5th of May. I'm Grady Wolf, market analyst with Bell Direct. Wall Street ended the last trading week on a high after better than expected non-farm payrolls data for April eased recession fears and lifted the S&P 500 to its longest winning streak in over 2 decades. The S&P 500 gained 1.5% on Friday, the Dow Jones rose 1.4%, and the tech-heavy Nasdaq ended the day up 1.51%. Payrolls in the US grew by 177,000 in April, which was well above the 133,000 economists were expecting, in a sign the labour market remains strong despite recession fears amid the Trump tariff turmoil. Across the European region on Friday, markets closed higher on better than expected economic data and trade war de-escalation between China and the US. The STOXX 600 rose 1.7%, Germany's DAX added 2.62%, the French CAC rose 2.33%, and in the UK, the FTSE 100 ended the day up 1.17%. Asia markets ended the week in the green as trade talks between China and the US continue to make good progress. Hong Kong's Seng rose 1.74%, India's Nifty 50 rose 0.21%, Japan's Nikkei added 1.04%, and South Korea's Kospi index ended the day up 0.12%. Locally on Friday, the ASX 200 ended the week on a high with a gain of 1.1%, boosted by strength among tech stocks following a strong night for the Nasdaq on Thursday night, despite gloomy earnings out of Amazon, Block and Apple. Corporate travel management tumbled 9.2% on Friday after saying it expects to report lower revenue and earnings growth due to the initial impact of tariffs on client demand, while Block sank 25.9% after the digital payments provider lowered its full-year guidance. On the commodities front this morning, oil is trading 3.6% lower at $56.24 a barrel. Gold is up 0.14% at $3,244 an ounce, and iron ore is down 1.07% at $98.19 a tonne. The Australian dollar has further strengthened against the greenback to buy 64.53 US cents, 93.38 Japanese yen, 48.56 British pence, and 1 New Zealand dollar and 8 cents. Ahead of Monday's trading session here in Australia, the SPI futures are anticipating the ASX will open the day up 0.4% to extend on last week's gains. And now let's dive into some trading ideas for your consideration today. Bell Potter has raised the 12-month price target on Woolworths Group from $30.75 to $31.85 and maintain a hold rating on the supermarket giant following the release of the company's Q3 results, including 3.2% year-on-year sales growth on a group level, while Australian food revenue rose 3.6% and Australian B2B business revenues rose 6.4%. New Zealand food sales rose just 1.8% year-on-year, and W Living sales fell 2.6% year-on-year. The reason for the maintenance of a hold rating is that Woolworths is currently trading on a multiple consistent to Coles, and the analyst feels it is difficult to see a catalyst to return the rating to a premium compared to Coles at present. And Bell Potter has reduced the rating on SGH from a buy to a hold and have reduced the 12-month price target on the company from $57 to $54.50, following a mixed outlook in the company's operating divisions. While equipment orders are lifting, aggregate prices are falling and the construction market remains flat in recent months. Trading on a PE currently of 20.3 times FY26 forward, the analyst believes SGH is currently fairly valued. And that's all for this Monday morning. I hope you have a wonderful day, a great week, and happy investing.